If you own apartments in Southern California, what I'm about to show you is going to impact what your property is worth today. Not 6 months from now, today. So let's dig in. What if I told you the biggest risk to apartment owners right now is not interest rates, it's what's happening with your tenants. Because while most people are focused on interest rates, there's something else happening underneath the surface that's starting to impact income, collections, and ultimately property values. I'm Chris German with The Apartment Dealer. Welcome back to The Apartment Dealer Show. Before we get started, if you're serious about multifamily investing, be sure to subscribe to the channel and turn on notifications. The information shared here can make all the difference to your real estate strategy. For Southern California landlords, the data coming out right now is very clear. The market is shifting and not in favor of landlords. And this isn't just one data point or one opinion. This is coming from multiple sources across the industry. We're talking about reports coming out from the Los Angeles Times, Apartments.com, Globe Street, Realtor.com, RealPage, and even signals from the Federal Reserve. And when you step back and connect all these dots, it paints a very clear picture of what's really going on, and more importantly, where things are headed. Now let's start locally. According to Los Angeles Times, rents in the LA metro area have now dropped to a 4-year low. Now think about that for a second. For years, owners have benefited from consistent rent growth, even when things stalled out, slowed. Rents were still trending upward. But what we're seeing now is different. There is no longer just slower growth. This is actual downward pressure on rents. And that matters because rent is the foundation of your entire investment. It drives your cash flow, it supports your valuation, it determines what a buyer is willing to pay. So when rents soften, even slightly, it has a ripple effect across the entire asset. Now let's layer in tenant behavior. Data from Apartments.com shows that renters are actively making financial trade-offs right now. They're downsizing into smaller units, moving to less desirable areas, giving up amenities just to lower their monthly payment. And this is important because it tells us demand hasn't disappeared, people still need housing, but what has changed is their ability to pay. So instead of landlords pushing rents higher, tenants are pushing back and adjusting their lifestyle to stay within their budget. And when enough tenants start making those decisions, that's when pricing power begins to shift away from the landlord. Now, here's where the story gets even deeper. A report from Globe Street highlights that rent payments have become such a challenge that $1 trillion fintech industry is emerging to help tenants pay rent. Now let that sink in. We're not talking about convenience tools. We're talking about financial lifelines, payment splitting, short-term credit, rent assistance platforms. When tenants need financial tools just to stay current, that tells you something about the underlying health of the renter pool. And for owners, this introduces another layer of risk, more delayed payments, more reliance on third-party systems, greater uncertainty in collections. So even if your rent is on paper, at a certain level, the quality and consistency of that income becomes a bigger question. Now, zooming out, Realtor.com is showing that this isn't just something happening in the Los Angeles area. Across the country, rents are flattening or declining in many major markets. So this is not a one-off local issue. This is part of a broader national reset. And historically, when you see this happen across multiple markets at the same time, it tends to reinforce the trend rather than reverse it quickly, which means this isn't something you just wait out in the short term. Now, let's talk about something that often flies under the radar, concessions. According to RealPage, concessions are increasing again across the market. We're seeing 1 month free, reduced deposits, move-in incentives. And here's why that matters. Concessions are often the first sign of weakness, even before rents officially decline across the board. Instead of lowering the advertised rent, owners try to preserve pricing by offering incentives. But in reality, 1 month free on a 12-month lease is an 8% rent reduction. 2 months free is over a 15% reduction. So even if rents look stable on paper, the effective rent is already moving down. At the same time all this is happening, on the income side, the Federal Reserve has held interest rates steady to start 2026. And while that may sound neutral, the reality is it's keeping pressure on the market because debt is still expensive. refinancing is still challenging, and buyers are still underwriting very conservatively due to the higher rates. So now you have a situation where income is softening, expenses are still elevated, and financing hasn't improved. And that combination is what really starts to impact property values. So when you step back and connect all of these data points, you start to see what's really plaguing apartment owners right now. Rents are under pressure, tenants are stretched, concessions are increasing, and capital is still expensive. This is not just one issue. This is multiple pressures all hitting the same asset at the same time. So the real question becomes, what does this mean for property values today? How are buyers actually underwriting deals right now? And what should you be doing as an owner in this environment? How do you preserve cash flow? How do you protect your assets? How do you preserve that financial legacy that I talk about so often? I'm going to address all these questions in my next video. We'll cover exactly what's happened over the last 90 days, the first quarter of 2026. Price per unit, cap rates, deal flow, rental rates, and more importantly, how buyers are underwriting deals right now and what strategies are actually working in this market. If you own apartments, you're not going to want to miss this next video. Make sure you subscribe to the channel, turn on notifications so that the moment we release that video, you're informed. Because the investors who stay informed stay ahead. This is Chris German from The Apartment Dealer, wishing you positive cash flow, tenants who behave, and a financial legacy you can be proud of. Till the next video.